I am buying the dip on Monolithic Power Systems, ticker MPWR. Let me tell you why. So first of all, the dip. Monolithic Power was hit twice in the past month, with the stock down 31% in the previous month. So the first dip happened here after their earnings report. They were down 19%, and the second dip happened just today, down another 15%. So what's going on with the stock, and why is it down, and why do I think it's a good value today? Well, let's start with the most recent dip that just happened. An equity research firm called Edgewater Analytics just released some research saying that they believe Monolithic's business with NVIDIA may be in danger. They cite some performance problems in NVIDIA's Blackwell GPU architecture that could be related to Monolithic's power chips. So that kind of leads me into what Monolithic Power Systems does. This is a semiconductor company, and those of you who have been around the channel for a while may have heard me talk about a small company called Allegro Microsystems. Monolithic Power is kind of like Allegro Microsystems on steroids. This is a much larger company, about a $30 billion market cap, and they design all different kinds of chips, but primarily power chips. So that would be this section here, power modules, integrated inductors. And rather than telling you the use cases for these chips, it's probably shorter to tell you what they can't be used for, because pretty much any electronic device is going to need some kind of power chip. You need a chip that's going to provide uninterrupted, continuous power to a device. This could be any kind of electronic device, right? Maybe the interface that I'm using to record this audio right now has some kind of power chip. But where they're really seeing lots of demand, or where they were seeing demand, is in electric vehicles, because these electric vehicles require a lot of power chips, and they require very advanced power chips. But the nice thing about Monolithic is that when the EV demand started to decline, they very quickly began to make up for that with data center growth. So like I said, there are countless use cases for their chips, and we can see that here in their investor deck. Now, this is a quarter old. I could not find the most recent investor deck. This is from August. However, we can see that in this second quarter of this year, about 37% of their revenue comes from enterprise data. So this is data center applications. This is your AI segment. We can see that's up from nothing in 2010. These guys went from not having a data center segment to having 37% of their revenue coming from the data center segment in this quarter. Now, granted, that's a long time, right? That's 14 years, but still, it's so cool how they were able to nab market share in data centers, because GPUs require a lot of power, believe it or not, and Monolithic Power has found a great growth driver in this. This segment alone is up 61% on a compound annual growth rate over the past 4 years. That's amazing. And the nice thing is that they don't rely on this solely. They also have applications in storage and computing, automotive, which is down. If we look at that, that is shrinking because of the smaller and smaller demand for electric vehicles. But when demand for electric vehicles rises, we should expect that to rise in tandem. Communications, consumer, and industrial, which are very cyclical industries, but they're a small part of Monolithic's business. So Monolithic, is it a data center stock? Is it an EV stock? It's a bit of both, and they do it all very, very well. I would consider this company to be a jack of all trades, master of none. So we can see in computing, right, things like AI, accelerators, data storage. Automotive, we have ADAS, which is advanced driver assistance systems. So that's kind of the self-driving car thing. But even just standard things in cars like lighting. We have industrial applications like robotics, factory automation. I love this little icon that they use for robotics. That is so funny. Look, it still has the stock logo on it. Anyway, and then 5G, obviously, and consumer electronics like laptops, PCs, AR, VR, audio systems. So truly, their chips can be used in pretty much any electronic device that you can think of. Okay, so that's enough about what Monolithic does. Let's talk now about these accusations. I'd never heard of Edgewater Research before today. I believe that this is a smaller firm, and the research that they posted is behind a paywall, so you have to subscribe to them and pay them money in order to get this research. However, it's clear that somebody leaked it because the stock was down as much as almost 25% today, so that kind of news, it eventually gets out, right? Let's see what the company has to say about this. Thankfully for us, an analyst at Rosenblatt actually spoke with the management team at Monolithic Power, who did comment on this report. They said that they are not aware of any technical issues with Blackwell sockets. So that's very interesting. So where is Edgewater getting this from? Monolithic says that a disqualification at this late stage of Blackwell production cycle would require the supplier, so that's Monolithic, to be advised of the situation, and they haven't been. They've seen no bookings, backlog variations, or cancellations period. It is well known that Monolithic will lose share in the Blackwell cycle. So Monolithic solutions are a temporary solution right now for NVIDIA Blackwell. However, this was already known before the research today. So according to the company, there's really nothing to this Edgewater research report. Let's look at another source. Here's a Morningstar analyst note. Morningstar is an investment research firm that I subscribe to. I happen to kind of like their research. They're very timely, very in-depth. The analyst that covers Monolithic Power on Morningstar just released this today. They say we maintain our valuation and are skeptical of reports of performance issues. So that's interesting. That kind of echoes what that Rosenblatt analyst found. They are maintaining their $700 fair value, so that's above the current price now. So again, another reason to buy the dip potentially. A report published by Edgewater claimed that MPS, that's Monolithic Power Systems, chips had lost significant placement in NVIDIA's Blackwell systems. They say we are skeptical of the report's claims and maintain our existing forecast. They go on to say that the report claimed that the chips had performance issues, but they have not seen any corroboration of the report. MPS management has no knowledge of any performance issues and has not seen any cancellations. So today's drop of 15%, as much as 25% at one point, might just be a nothing burger. I'm not saying that Edgewater is lying, but it's possible that either their source was not reliable or, much like a game of telephone, something got misconstrued along the way. You know that game that you play when you're a kid? Somebody has a message, they whisper it to the next person, they whisper it to the next person, they whisper it to the next person, and by the time you get to the last kid in the class, the message is completely different than when it started. I think we might be seeing a little bit of that with Monolithic Power today. So that's why the stock dropped so much today. Let's talk about why the stock dropped so much a couple of weeks ago, and that was their earnings report. So in their previous earnings report, Monolithic Power reported quarterly revenue of $620 million, and that's a 22% increase from the previous quarter. So this isn't year over year, this is quarter over quarter. Year over year, it's a 31% increase in revenue. That's quite impressive. So how did they get this massive revenue growth in such a short time? Well, look no further than this end market chart. Here's the most recent quarter in 2024 and the comparable quarter of 2023. Look at this. Enterprise data, 184 million as opposed to 98 million from the prior year. That's where the growth is coming from. It's all from data centers. They are seeing huge growth in their AI and data center segment, even though automotive is showing very, very lackluster growth year over year. In fact, if you look at the trailing 9 months, automotive is actually down year over year. So what's interesting is that even with one of their larger segments declining, they're still showing 31% year-over-year revenue growth because of this amazing strength in data center, in AI. So that is quite incredible. The other nice thing is, if you're a long-term investor such as myself, and you are bullish on the long-term EV thesis, which I am, we can expect these numbers to eventually turn around. I think we're going to still need to see a lot happen before we see a turnaround in the EV sector, right? We need to see interest rates coming down. We need to see costs of these vehicles coming down. They need to be a bit more accessible. We need to build out the electric vehicle charging infrastructure, but at some point in the future, we should expect this segment to return to growth. So if that segment returns to growth and this data center segment continues to grow, that could be a recipe for a really, really good investment. Now, that's all of the good news from the recent earnings report, but the stock was down. So obviously the market didn't like something, and here it is, business outlook. So their revenue targets for the fourth quarter are revenue in the range of 600 to 620 million. We can see why that's disappointing because they just reported 620.1 million. So no matter how you look at it, this guidance is pointing to negative quarter over quarter revenue growth. However, it's still up year over year. And this is the problem when you have a business that sells hardware products, so chips, you're going to have a bit of cyclicality, right? The semiconductor industry as a whole is very cyclical, and there are lots of different niches within semiconductors, and those are all cyclical. So it's not always going to be smooth and steady growth for Monolithic. However, it's nice that they're able to maintain these higher revenue numbers. We also need to keep in mind that Monolithic is quite profitable. So they are a fabless semiconductor company. That means they don't actually manufacture the chips. They just design them and outsource the manufacturing to a foundry such as Taiwan Semiconductor or Global Foundries or something along those lines. And when we look at the company's income statement here on Google Finance, we can see that their profit margins are in the 20s. So like I said, strongly profitable company. So even if they don't have a lot of growth, the fact that each quarter they're able to have 23% of their revenue hit the bottom line in the form of net income is quite impressive. So that's a bit about what sent the stock down. Now let's talk valuation and why I'm buying. Here is my high quality company spreadsheet. This is a list of companies that I'm following or own, basically stocks that I'm watching in some way. And here's Monolithic Power. And here are all the factors that I look at when analyzing a company. So they have pretty strong gross margins, 55%. That's due to their fabless business model that's allowing them to have a bit higher gross margins. The thing that's nice is that even though they're a semiconductor company, they're not really spending all that much on research and development. The semiconductor industry is notorious for overspending on R&D. It's kind of just a fact of life. Semiconductor companies have to spend on R&D, but the fact that it's only 25% of their gross profit is quite nice, and their SG&A is on the lower side as well at just 27%. So just over 50% of their gross profit goes to selling, general administrative, that's things like advertising and staffing, and research and development, innovating on new products. So that leaves about 50% left over, and that can potentially go to the bottom line in the form of a net profit. Obviously, there are other expenses, but on a surface level, they're not spending too much on their operating expenses. Debt to equity, 0%. Now, I use Yahoo Finance, and they take into account long-term debt to equity. So that brings me to MPS, Monolithic Power's balance sheet, which is beautiful. If you know me, you know I love a good balance sheet. And one of the things that I really like is when a company's cash on hand can pay off their entire debt balance, and Monolithic is one such company. They have cash of $700 million, and they have total liabilities of $500 million. And that's just cash. So if they wanted to, they could pay off all their debt with cash and still keep on going. I like a strong balance sheet because it gives a company options. They can make acquisitions. They can buy back their own shares. They can reinvest in growth. They can do so much with this amazing balance sheet. We also need to keep in mind that, again, that's just cash. So if you look at their total current assets, that's $2.1 billion. And their total current liabilities are only $336 million. So this is just a very, very healthy balance sheet, shows very good financial prudence by management. So I like to see that. So long-term debt to equity is 0%. International sales of 63%. They only have 37% of sales coming from the Americas. Now, their valuation is still a bit steep. So the three valuation metrics that I look for on a surface level are price to sales, PE, and price to free cash flows. So price to sales is on the higher side. It's around 13 right now, even after the double drop. However, if you're used to analyzing growth stocks, you might not actually think that's that high because growth stocks tend to come at a premium, right? You have to pay for that growth. So the company grew 31% year over year in their quarterly revenues. So for that type of strong double-digit revenue growth, you sometimes have to pay a higher premium, and that might come at the expense of a higher price to sales, higher PE, and a higher price to free cash flow. Now, the price to free cash flow looks low. It's lower than my portfolio average of 36. And that's because I annualized their most recent quarter. So this may not be consistent. What might be better is to look at their actual trailing 12 months. However, I like to annualize the most recent quarter because it gives you sort of a more dynamic, up-to-date picture of the company. However, you also have that caveat that it may not be the most accurate. So it's certainly not a cheap stock. However, we need to keep in mind that they are growing and they have lots of long-term tailwinds, so that they can potentially continue this growth, which is why you might need to pay a premium. So what I'd say is that the stock was probably overvalued, but after these two drops, I think it might actually be slightly undervalued. Now, as with any investment, I am taking a dollar cost average approach. That means I'm buying a little bit at a time. I'm not just diving right in, and that is gonna help me get the highs and the lows of the stock and eliminate that market timing risk. And finally, if you're a dividend investor, you will be happy and probably surprised to know that Monolithic Power does pay a dividend that's been increasing over time. So they have yet to cut their dividend, and they've actually been increasing it quite a bit lately. So just 3 years ago, the dividend per share on a quarterly basis was 60 cents, and it's more than double that now. So they've doubled their dividend in about 3 years. That's quite amazing. So if you are a dividend growth investor, this stock may actually appeal to you. And it's not just dividends, they're finally repurchasing their shares. They've been authorized to repurchase up to $640 million worth of common stock, which expires in 2026. Now, this is a company that has been diluting shareholders, so it's nice that they're finally flipping the script and buying back their shares and reversing all that dilution. So between dividends and share repurchases, shareholders are being rewarded already, even though the company is still growing. So this is an interesting company that's a nice hybrid of growth and value, which is kind of what I like to look for. I am a blend investor, so I like companies that show signs of growth and signs of value. And I think Monolithic Power fits the bill. It's a very diversified company. They have lots of applications. Systems. It's at a reasonable valuation, right? Keep in mind that you have to pay a little bit more for this revenue growth, and it has that beautiful, beautiful balance sheet that I look for. So that's why I'm adding this company to my portfolio. My YouTube members are all notified of this, but I thought I'd give everybody, even if you're not a member, a little freebie just to say thank you guys so much for watching the videos and for subscribing. We actually recently hit 3,000 subscribers, which is amazing. So if you're new here, please subscribe. I post stock deep dives and stock analyses pretty regularly. And if you liked the video, please hit that like button. And if you disliked it, please hit that dislike button and let me know how I can improve in the future. I really do value your feedback. What do you guys think of Monolithic Power? Let me know down below. And thanks so much for sticking around and watching the video. I hope you have an amazing day.